It's Monday, October 14th. I was away last week, Wednesday, Thursday, Friday, so that's why I didn't put out any videos. Was doing a little bit of traveling. Alright, I just sent out the new edition of MMT Trader. It's out, so if you want to get that, go to my website, pitbulleconomics.com, sign up for a 30-day free trial. Remember, I'm the only one who does applied MMT. I take the concepts of MMT and I apply it towards markets and trading and investing. So, a lot of things happened, particularly on Friday. Fed came out with an announcement that it will be extending and adding to its liquidity provision measures. And I had to rethink all this stuff because, you know, the news was coming fast and furious, a lot of changes, all of these things, all of these Fed policies and these new measures. I mean, they just came right out of left field. There was no advance notice or anything of that nature. And I did a whole in-depth discussion in this week's report about what the impact of these policies are going to be. Let me just distill it down in a very simple explanation if I can. Now, when the Fed was conducting its balance sheet roll-off, right, when it was shrinking its balance sheet, remember that started in December 2017, and they were going $50 billion a month, letting $50 billion a month in securities roll off. And the effect from that was to bring down the level of reserves in the banking system. And what happened was, I mean, somebody basically fell asleep at the wheel because reserves got so low in August that it was basically right at that 10% reserve ratio threshold. In other words, the system had just enough availability of reserves, and actually it was beginning to dip below that 10% threshold. Now you have to understand that these reserves are not distributed equally throughout the system. I mean, mainly the big banks hold most of these reserves. So what happens is these smaller banks, they need those reserves to cover deposits, and some of them got squeezed. I mean, there was a squeeze in the system because they're just, and again, this goes back to the fact somebody fell asleep at the controls. I mean, you would think that Powell would have understood this. This is basic stuff. Or you would think, and Yellen, going back to when she implemented the $50 billion a month roll-off, which I was for, by the way. But you still need to have somebody flying the plane, right? I mean, you know, it was on automatic pilot to the point where they were running out of gas and nobody was paying attention. So then you had this very kind of nervous response with the repos and stuff like that. They had to. The rate was spiking up above their policy rate, the Fed funds rate. They extended those repos, they added term repos, and then on Friday they came out with this big announcement that they're going to do $60 billion a month starting next month in Treasury bill purchases. Now everybody went crazy that this is QE. No, because if you read the statement, if you read the Fed statement, they said, we just want to do this to maintain reserves at the level where they were in early September. Now in early September they were about 1.48 trillion, 1.45 trillion. Right now they're about 1.53 trillion. All right? Let me just state this, as long as this is their intent, as long as this is their goal, and by the way, this is just normal open market operations, normal policy. I mean, what happens? The Fed sets a rate, a policy rate, and then it manages reserves to sustain that rate. Now, ordinarily, it shouldn't even have to really manage reserves, because if it's paying 2% or whatever, 1.75% on the rate, nobody should lend below that, because the Fed is paying 1.75, but it can shoot above if there's not enough reserves in the system. So they have to manage reserves. And remember, the Treasury is selling bonds all the time, and that's a reserve drain. So somebody fell asleep at the wheel, and they said, okay, we're going to rectify this. And the more I looked at it, because I was saying, oh, reserve edition, and then I went away. I wasn't able to make a video, but I saw on Thursday that with all the repos that they did, and it was almost 400 billion, 387 billion in repos, the reserves went up only by 125 billion. So they were keeping them constant. And therefore, I felt at that point, Thursday, hey, we got to start buying the dips, because this is not bearish anymore. They're doing what they should have been doing a long time ago, before whoever it was that fell asleep on the job fell asleep. So that's where we are right now. Anyway, I get into all this in my discussion in MMT Trader. Again, if you want that, go to my website, pitbulleconomics.com, and sign up for a 30-day free trial. Now, folks, I am here to help you. Let me help you. Remember, like the movie from Jerry Maguire? Help me help you. Help me help you. I am here to help you through education, information, explanation, and of course, mental game. Now, a lot of you who have been with me for a while, you understand that it's all about mental game. It's all about mental game. And you know what? I've been noticing, and maybe you've been noticing this too. If you go on Instagram, if you're on Instagram for any length of time, or even on YouTube, you start to see these things. Hey, I'm the greatest option trader in the world, and I have this, I made $500 last week on a $10 bet and this and that. And you see a lot of these promos for guys selling these kind of, get rich schemes or whatever, option trading, I'm a stock trader, I made, Here's the thing, folks, this is again playing into the vulnerability or the misconception on the part of most people that this is an activity for quick riches, Put up $5, make $500 this week, and then next week the same thing, and yes, maybe sometime I'll take a little tiny loss, and then the next one after that, and I'm going to quick riches. Nobody who's rich, that I know anyway, who built a business, or who's in the markets, or who spent a lifetime accumulating assets to achieve a level of wealth, nobody that I know, and I've been around, has done it in a week or 2 weeks or whatever. Now I have people saying, Mike, you were wrong last week on Tuesday. It didn't do what you said it was going to do on Tuesday. I mean, folks, I'm here to help you. Throw out the systems, at least mentally throw them out, and focus instead on your own behavior. You got to develop the mental game. You got to develop patience. You have to see this as a long-term endeavor. You have to have vision. And vision means the ability, with confidence and with experience and with knowledge, to sit with something until it works out to where it's supposed to go. And there are going to be times, dare I say, when the outlook is wrong. But what do? You manage that position and you trade out of it. You manage that position and you trade out of it. All these panicky reactions. You were wrong because last Tuesday you said that and it did that. Or a week went by and it didn't do what you said it was going to do. I mean, you got to break that mentality. You got to break that mentality. Guys sit with positions for years before the big payoff. You have to break that short term. That is very, very self-destructive mentality. It's not going to happen for you. I'm telling you right now, it's not going to happen for you. I give you knowledge. I give you information. I give you mental game. Those three things are the secret to success. If you want the score in a week, or if it didn't happen in a day, and you're upset about that, then you are in the wrong game. You're not going to make it. You are not going to make it. Help me help you. That's what I want to do. See you tomorrow. Go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. Remember, I'm the only one who has an applied approach to MMT. Bye.